Hey everybody, so it's Friday. Yes, we had the jobs report today. For those of you who got my email last night, I said that it would be a very strong non-farm payroll. My forecast was 257K. That was well above the 200K that the street was looking for. It was also above the ADP employment report that we got on Wednesday, which was 235K. And I said in my email that we'd see the dollar rally initially, we'd see gold sell off initially, we'd see treasury sell off, and I thought we'd see stocks sell off on higher bond yields, which we did get slightly higher bond yields. But then I sent out a follow-up email saying, sell the dollar, buy gold, buy stocks. Stocks are going higher. So that's how everything basically worked out. So a couple of things in addition to the jobs report, which again was really strong at 313K. That would make it the high. Oh, by the way, before I get into that, last month's number was revised up to 235. Originally they had 200, and I said last month in my forecast that we were going to get a strong number. I believe my forecast was, it might have been up around 270, but it came in very weak, but the revision was up. So it went more in line to what I was forecasting in my emails. And you know, for those of you who have been following me for a while, you know that my calls on these job numbers have been better than anybody else's, at least in the sense of direction, above or below the expectation, all right, and the magnitude. So that's very important because that's what creates the reaction in the markets, the deviation from what the market is expecting, all right? And we got 313K, very big. That would make it the biggest in the last 6 years, okay? I always look back the last 5 years. The highest we had, I believe it might have been in 2014. I don't remember the year, but I know it was 286K on a February. We got 313K, so very, very strong. Now, as far as stocks are concerned, with a 10-year Treasury yield below 3%, I mean, we've seen these numbers all the way up to 3%. We've seen these yields. This is nothing that is going to bother the stock market, so you got to buy every dip right now. Secondly, let's think back a couple of days ago when Gary Cohn resigned and the market sold off 300 points. I sent out an email and I did a video on this channel saying anyone who is selling the stock market based on Gary Cohn's resignation is retarded. All right? So if you had if you listened to my video back then, a couple of days ago when he did resign, I said anyone who is selling the stock market based on Gary Cohn's resignation is retarded. Okay, so you had that information. Now, something very, very big is happening very soon, within the next week to 10 days, and that is the Senate is going to pass a banking bill which will remove a lot of the regulatory restrictions that were placed on banks, and we're talking about mid-sized banks which fall in the category from 50 billion in assets to 250 billion in assets. There are only 7 banks in the United States that are above 250 billion in assets. So you're talking about the vast majority of the banks in the United States are going to get some regulatory relief. Now, there's a lot of outcry about this, like, oh, you're stripping away Dodd-Frank, and, you know, these were the protections that were put in after the crash, and you're just fomenting the environment for another crash. You know, I'm not going to get into that. I'm just going to say that this is a very, very important measure when it passes, and it will pass because it has bipartisan support. It is going to take the economy, the growth rates, the inflation rates up to another level, all right? Because with the banks now with the handcuffs being taken off, you're going to see an acceleration in lending. You're already starting to see that, by the way, since they have suspended the debt ceiling. And again, these are only things that my people understand. Like, nobody is talking about, or nobody talked about, the connection between reserve balances and when we had the debt ceiling in place, the volatility in reserve balances as a result of that, because of the Treasury not being able to sell securities which act as a normal reserve drain. These fluctuations had all kinds of negative impacts on the banks. And I talked about that. Nobody else is talking about that. And I go into very, very great detail in the weekly report, or I had been, about that. That was removed. We see the volatility on reserves come way down, because now the sale of treasuries acts to, keep reserve balances at a certain level. Anyway, this measure, this bill, when it passes, woo, forget it. It's going to be unbelievable. So a lot going on. Of course, my people, SEAL Team 6 subscribers, they get the inside detail on all this stuff. And of course, it'll be coming out in the report, which comes out every Monday. If you want to get the report and start looking at the back issues, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. That's it for today, everybody. Enjoy your weekend. I'll probably see you back here on Monday. Bye-bye.